Hello and welcome back to Bitcoin Dorks, your daily source of information on cryptocurrency markets and news. Today, we are going to discuss an important story that is making headlines in the banking industry. According to a recent article published by CoinDesk, US bank regulators are currently investigating the leaders of failed tech banks for alleged misconduct related to banking laws. The Federal Reserve, the Office of the Comptroller of the Currency, and the Federal Deposit Insurance Corp have launched investigations into several failed tech banks, including NetBank and IndyMac. The investigation focuses on the role of executives in these banks and whether they violated banking laws by engaging in risky lending practices or other forms of misconduct. The investigation is still ongoing, and it is unclear what the outcome will be. However, this news highlights the importance of proper regulation in the banking industry, particularly when it comes to emerging technologies such as cryptocurrencies. The banking industry has been grappling with the rise of cryptocurrencies for years now, with some executives and regulators expressing concerns about their potential for fraud and misuse. However, as more and more people adopt cryptocurrencies, it is clear that they are here to stay, and regulation will play a crucial role in ensuring their safe and responsible use. This investigation is a reminder that no industry is immune to misconduct and that proper regulation and oversight are necessary to prevent abuses of power. The banking industry has a long history of misconduct, ranging from fraudulent lending practices to money laundering. As investors in cryptocurrencies, it is important for us to stay informed about developments in the banking industry and to advocate for responsible regulation that supports innovation while also safeguarding consumers. But why are regulators investigating these failed tech banks, and what does this have to do with cryptocurrency? Let's take a closer look. NetBank, for example, was an online bank that collapsed in 2007 during the subprime mortgage crisis. It was one of the first banks to embrace online banking, and its failure was a significant blow to the online banking industry. The investigation into NetBank's executive centers around allegations that they engaged in risky lending practices and other forms of misconduct that violated banking laws. Similarly, IndyMac, which was once one of the largest savings and loan associations in the US, failed during the 2008 financial crisis. The investigation into IndyMac's executive centers around allegations that they engaged in fraudulent lending practices and other forms of misconduct that contributed to the bank's failure. Both of these cases highlight the risks of misconduct in the banking industry and the need for proper regulation to protect consumers and maintain the integrity of the banking system. While the investigation is not directly related to cryptocurrencies, it is a reminder that regulation is necessary to prevent abuses of power and to ensure that financial institutions operate in a safe and responsible manner. The rise of cryptocurrencies has brought new challenges to the banking industry, and regulators are working to keep up with the pace of innovation. In recent years, there have been numerous efforts to regulate cryptocurrencies, ranging from outright bans in some countries to more nuanced approaches that seek to balance innovation with consumer protection. In the US, the regulatory landscape for cryptocurrencies is complex, with multiple agencies responsible for oversight. The Securities and Exchange Commission, SEC, for example, regulates cryptocurrencies as securities, while the Commodity Futures Trading Commission, CFTC, treats them as commodities. The Internal Revenue Service, IRS, also treats cryptocurrencies as property for tax purposes. This patchwork of regulation has led to confusion and uncertainty for many investors, and there have been calls for greater clarity and consistency in the regulatory landscape. Some advocates have called for a more unified approach to regulating cryptocurrencies, with a single agency responsible for oversight. Whatever the outcome of the investigation into the failed tech banks, it is clear that proper regulation is necessary to ensure that the banking industry, as well as the cryptocurrency industry, operates in a safe and responsible manner. Proper regulation can prevent abuses of power and protect consumers while also promoting innovation and growth. In the cryptocurrency industry, there have been instances of fraud and misconduct, particularly in the initial coin offering, ICO, space. ICOs raised billions of dollars in funding from investors, often without proper disclosure or regulatory oversight. This led to a wave of fraud and scams, with many investors losing their money. To combat this, regulators around the world have taken steps to crack down on fraudulent ICOs and other scams. In the US, the SEC has issued numerous warnings to investors about the risks of ICOs and has taken enforcement action against fraudulent offerings. Other countries, such as China, have banned ICOs altogether. While regulation can help to prevent fraud and protect consumers, it can also stifle innovation and growth. The challenge for regulators is to strike a balance between consumer protection and innovation. Too much regulation can stifle innovation and drive business overseas, while too little regulation can lead to fraud and abuse. In the cryptocurrency industry, there is still much work to be done to strike this balance. The regulatory landscape is complex and often unclear, and many investors are still uncertain about the risks and benefits of investing in cryptocurrencies. As investors in cryptocurrencies, it is important for us to stay informed about developments in the regulatory landscape and to advocate for responsible regulation that supports innovation while also protecting consumers. By doing so, we can help to ensure that the cryptocurrency industry continues to grow and thrive in a safe and responsible manner. In conclusion, the investigation into the failed tech banks is a reminder of the importance of proper regulation in the banking industry, as well as the cryptocurrency industry. While regulation can prevent abuses of power and protect consumers, it can also stifle innovation and growth. The challenge for regulators is to strike a balance between consumer protection and innovation. As investors in cryptocurrencies, it is important for us to stay informed about developments in the regulatory landscape and to advocate for responsible regulation that supports innovation while also protecting consumers. By doing so, we can help to ensure that the cryptocurrency industry continues to grow and thrive in a safe and responsible manner. Thank you for watching today's video.